Wall Street's rally is facing a huge test this week. We got fresh inflation data coming, record-breaking corporate buybacks are the word on the street, and then growing odds of Fed rate cuts and a stark warning from President Trump in relation to tariffs. Let's break it all down. Y'all, so stock futures are slightly higher today as investors are geared for a critical stretch of economic data that we're getting this week. It's a busy week, but on Tuesday it starts off the busyness with CPI data coming in for July's consumer price index. And this will be the first moment of truth for tariffs in regards to where we're actually going to settle, because it took some time and summer's kind of progressed on, and now we're finally getting some data that could have tariffs baked into the pie, so to say. Core goods prices are expected to tick higher from June thanks to import fees, with a 0.3% rise in core CPI and a 0.2% rise for the headline number overall. That would lift the year-over-year inflation rate to 2.8% for the headline and 3% for core in regards to CPI, both moving further away from the Fed's 2% target that they'd like to see. Now, is this stagflation that we're seeing? We have prices are rising closer to a 3% annual pace while growth of the economy is slowing below 2%. That's not full-blown stagflation, but it's not the brew investors want either. RBC Capital Markets says that this week CPI won't fully reflect new tariffs. Those may first show up in Thursday's producer price index. So that'll be PPI when we get Thursday will be when we get the PPI out, which will forecast to rise to 0.4% headline to 0.5% core. Hotter than expected inflation could be more of a reality check for the market and can cut into the Fed's room to lower rates next month. But with the rate being so high where it's at, we're around 90% for a guaranteed cut for the Fed's next meeting in September, which, what the heck, why don't I got this pulled up? Let's just pull it up real quick. So that'll be the CME Fed Watch tool, and let's see where we're sitting at this real quick. So at the next meeting in 37 days, 16 hours, 3 minutes, 51 seconds, we're sitting at an 88.4% chance that the market expects the Fed to cut rates. So that's the prediction rate right there. So the market's positioning for Friday, which the Nasdaq logged its second straight record close, and the S&P sits just shy of its July 28th record, and the Dow Jones is still chasing its December 4th high. It's really lagging since it's not exposed all of these tech stocks that are just completely killing it. But this week also brings the University of Michigan's consumer sentiment over there on Friday, August 15th. I mean, aside all of that other stuff, we also have Jerome Powell's appearance in Jackson Hole. We got a ton of Fed speakers, but that's not all we got this week, because this week is a week in August and record corporate buybacks for American companies are making a record pace right now. And we're in August, right? So corporations repurchasing their shares are at a record pace with nearly $984 billion announced so far in 2025. And this is on track to surpass $1.1 trillion in 2025, assuming we stay on track, assuming nothing changes up. Now, that's the largest single record. That's the largest total we've gotten since records began back in 1982. So this is really huge. And we talked about this in earlier videos about how August and September are tough for the markets. But August is somewhat a little, like, it's not super tough just because we were expecting these corporate buybacks to come to fruition, and here we are. Here's all of the news articles coming out talking about it. Big tech like Apple, Alphabet, big banks like JP Morgan, Bank of America are all leading the charge with these corporate buybacks with strong earnings growth. tax cuts and uncertainty around trade slowing other investments, buybacks have become the go-to use of corporate cash. Some people are saying this might not be the most effective use of corporate cash with their treasure chests of cash that they've saved up. Just because stocks are at a record high, it seems kind of reckless. But in Q1 alone, the S&P 500 firms bought $293.5 billion with a B worth of their own stock back, a quarterly record, with the top 20 companies accounting for almost half of all of the repurchases we've gotten. Analysts expect this buyback wave, combined with the 82% of S&P 500 companies beating Q2 earnings estimates, to keep supporting this rally to go even higher here in the near term at least. And then Fed Bowman came out on Saturday, and she was speaking at a bankers conference on Saturday and doubled down on her call for rate cuts come in September. Citing a bleak jobs report, she said that the weakening labor market outweighs inflation risks, and she expects to support 3 cuts at the Fed's remaining meetings this year. So that's right on track with what we talked about in the last market update video I made, where JP Morgan came out and said now they're expecting 3 rate cuts this year. So her words add to speculation the Fed could pivot more aggressively, especially if incoming data continues to point to slowing growth. But that's really just a guess right now. We don't necessarily know where we could go because the data's we've been seeing outlier data like every data release, and it's been all over the place on each far end of the scale. So let's just keep on watching this. Then Trump came out with a warning. So the Trump administration is counting on $50 billion in tariff revenue to fund its policy priorities. We had the tax and spending, the big beautiful bill pass. But a federal court case now threatens that stream. So in a post on Friday, Trump warned the court that if the courts deemed tariffs illegal, it would be 1929 all over again, a Great Depression. And you can go through on his Truth Social and read this entire thing. We're not going to do that today. But the case outcome could have a major fiscal and market implications, assuming where we go, because especially if tariffs already a central theme in inflation and trade policy debates, what happens if now they're illegal, and what other ways will the government keep the lights on? And that was part of Trump's big proposal when he was gaining votes and debating, pretty much talking about what his policy is going to be and what he's going to do when he's president. Tariffs all along are what he's been talking about. So now if those are illegal, I know there's other ways around it. You could do sectoral tariffs and all of these other fancy ways to get around it, but it won't be the same as the current setup now. And we're just wondering where that could possibly take us, and if they have to issue more debt to raise money to keep the lights on at the government, how does that impact treasuries and treasury yields, which impact borrowing costs for the government, businesses, and people like you and I, the consumers? So this week's setup, we got record highs in sight, record buybacks in motion, inflation data that could make or break the Fed's rate cut odds, all in the face of all of this Fed speak that we got coming this week, and political risks rising. I'll be watching Tuesday's CPI, Thursday's PPI, Friday's sentiment data closely, plus any surprises from Jackson Hole and all of it in between. We didn't even go through line by line on everything, but I'm going to read it. I'm going to cover it. Make sure you're subscribed for daily breakdowns so you don't miss any of the moves that matter. I'll see y'all. Hope your weekend's great, and good luck out there.